Hey traders, Gavin McMaster here from Options Trading IQ, and today I'm going to show you how to enter diagonal spreads in interactive brokers. Just before we start, a quick reminder that everything discussed is for educational purposes only, is general in nature and does not take into account your personal circumstances. Okay, so going over to Interactive Brokers Risk Navigator, this is a trade that we were looking at yesterday in the Accelerator program, so my members will know this trade pretty well. It's what I call a pre-earnings diagonal put spread. So Coinbase has got earnings on Feb 13th. What we're doing is we're selling the first expiration after earnings at around the 15 delta, so 16 delta in this case. Very high volatility with that option because of the earnings announcement. So we've got a lot of volatility skew. Then for the option that we're buying, we go out 2 weeks, so Feb 28th, and we find something trading for around the same price or slightly higher. Usually the delta is going to be pretty close. So we've overall got a delta of 1. We've got limited risk on the upside. The most we can lose is the debit that we pay to enter the trade. So the worst thing that can happen on the upside is both of these options expire worthless and we lose the difference between this and this times the number of contracts. So what's that, about 125, 250, something like that. So that's our max risk on the upside. Max risk on the downside is the difference between the spread. So 10 times 2 times 100 is 2,000 plus the $250 premium that we're paying to enter the trade. So I always like to look at it in Risk Navigator first. I want a nice flat T+0 line. I want this nice profit zone on the downside, and I want to have limited risk on the upside. So that's the strikes that we're going to go with. Now let's have a look at how we set up the order in Interactive Brokers. So we could do it as 2 single orders, but I find it easier to do it as a combination order. So we put in our ticker, combinations, options, combos, and we get our combo selection window that pops up. First thing we want to do is change strategy to a diagonal spread. We want to choose the short-term option expiration, which was Feb 14th, and the back week was Feb 28. We're trading puts. Our front strike was 240. So that's our Feb 14th strike. And then our back strike, our longer term option, was 230. So there's our combo spread there. Again, put our 2 dates in, Feb 14th as the front month, Feb 28th as the back month, choose puts, and then we choose our front strike and our back strike. And then we'll hit add and OK. So now we get our order. I'm just going to separate out the stock and the individual options. And there's our combo order. Now, because it's after hours, we're only getting a bid price. We're not getting an ask price and no midpoint. So it's a little bit trickier, but we want to trade somewhere around the midpoint. We know that's the difference between this number and this number. And we saw that on Risk Navigator, about $1.25. And we do get this handy little cheat sheet from Interactive Brokers. To buy the diagonal spread means to sell the short-term option and buy the longer-term option. And if we sell the diagonal spread, we'd be buying the short-term option, selling the longer-term option. We want to do this top one because we want to sell the short-term 240 option. So we want to set up a buy order. To do that, we click the ask price, and we know that our midpoint is about $1.25. So I could put that order in for $1.25. Good till cancel, hit to transmit, change my contracts, and then that order will go live tomorrow when the market opens back up. Now, what I do a lot of times when we're buying, we want to pay the lowest price. So rather than putting it in at whatever the midpoint was at today's close, I might put that in at a slightly lower price, maybe even something fairly unrealistic, like 70 cents. I know that's not going to get filled when the market opens, but the order is going to be live in the market. Then once the market opens, I'll check what the midpoint is. Hopefully around $1.25, I'll come in and I'll update this and I'll get the order filled. If you've got any questions on that, please just reach out anytime. Now let's look at a different type of diagonal. And if I go back to Risk Navigator, the other style of diagonal is what we call a poor man's covered call. And in this example, what we're doing is we're buying a leap option. So January next year, long-term option, we're buying that in the money. I'm usually at around a 65 delta or a 70 delta for the long option. And then I'm selling a shorter term out of the money call option against that long. Very, very similar to a covered call trade, except rather than a really expensive trade where we're having to buy 100 shares, put in $19,000, we just buy a call option as our stock substitute. That's only going to cost us about $3,500. So much less capital at risk, really nice return profile on the upside. And we're still taking advantage of that volatility skew because we're selling the high vol, we're buying the low vol. Now, this trade is a lot more directional. We've got a lot of positive delta dollars, and an upward sloping T+0 line, whereas the previous example, we had a very flat T+0 line. It was more of a neutral trade. This is a very bullish trade. So completely different setup, a different reason for entering this trade, but a different style of diagonal. So let's go and look at how we would do this order. Okay, so back to my main window. I'm going to go to options combos again. I'm already on diagonal spread, so that's good. Our front option in this case was the March monthly option, and our back month was January next year. This time we were doing calls. The front strike was 205. That's the short-term call that we're selling. The back strike that we were buying, our long-term leap that we're buying, was at 180. So there's our order there. We highlight that, add, and okay, there we go. Now we've got our cheat sheet, and again, same, even though it's a different trade, we're doing the same thing. We're buying the diagonal. We just double check because we're wanting to sell the short-term call option and we're wanting to buy the long-term call option. So we want to buy the diagonal again. Again, it's after hours, so we're not getting a bid or an ask price, but we can hover over the ask column, click that, and that'll create our buy order. And again, we're having to buy for 36.27 roughly, and we're selling for 570. So if we take the difference, it's about 30.55. So that's going to be our order. And once I hit transmit, that'll go live in the market. Again, it's a buy order. So I'm going to put that at just an unrealistic price, just in case there's a big gap in the morning. When the market opens, I'll come in, I'll check what the bid and the ask is and the midpoint, and then I'll update my order and get that filled. So I hope that helps you with entering diagonal trades in Interactive Brokers. Like I said, if you've got any questions, please reach out anytime. And if there's any other videos that you want me to do, any little tutorials or instructions, just let me know in the comments and I'll be happy to put those together for you. Thanks for watching and have a great day.